Before we get into today's episode, don't forget to sign up to the book and the VIP newsletter at thehighestandbestuse.com. For the book, you can get that at Amazon, Chapters, Barnes & Noble, all of these places in paperback, ebook, hardcover, and of course now the Audible version as well. So grab the book, sign up to the VIP newsletter, thehighestandbestuse.com, and now to today's episode.
Hi, I'm Mark Loeffler, and the highest and best use for my business is value-add apartment buildings all across Canada.
Thanks for tuning into the Highest and Best Use Real Estate Podcast, where we talk techniques to optimize your land, structure, skill sets, and time, as well as the highest and best use principles to make your business more profitable, productive, and efficient. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. And my guest today, oh my goodness, Mark Loeffler's on the show. Loeffler Real Estate Brokerage. He's also a stock options trader, and he's investing in multifamily all across Canada, which is what we're here to talk about today. So, Mark, thanks for being on the show.
Thanks for having me, Ryan.
This is fun.
Great to be here.
I love that we're doing it in the new setup today.
I do love the cigar room. I was very upset that we weren't smoking them on the podcast.
After the show,
yeah.
I'm pumped for that. Tell the folks a little bit about yourself.
A little bit about myself. So obviously I have a YouTube channel, Mark Loeffler Experience. If you haven't checked it out, go over and check that out. I've been investing in real estate now for just over 20 years. I own a couple hundred units. I've started in southwestern Ontario and then moved out to Alberta recently to buy units. I've been a real estate agent now since 2009, specializing helping people buy multifamily apartments, or investment properties. And I actually just got licensed out in Alberta in December as well. So I'm helping people buy apartment buildings out there as well. Cool.
What do they call that brokerage in Alberta, or like the license in Alberta? Here it's OREA. Right? Or some subset thereof.
Yeah, it's called Area.
Area? Yeah. Very complicated.
So complicated. Alberta Real Estate Association.
That's fine. Okay, so let's start with the brokerage. So you started in Ontario and opened this brokerage. How did that come about, and why did you do it?
Why did I start selling real estate? Yeah. So way back when I was doing rent-to-owns, I wrote the book on rent-to-owns, investing in rent-to-own property, a complete Canadian guide. And I was putting on seminars and doing whatever. And after I wrote the book, I kind of got bored because I had a lot of free time, because you wrote a book and you know that it's pretty time consuming.
It takes time, yeah.
Because I did mine in 2.5 months, and basically that's all I did.
Right. Isn't it incredible how much thought it takes?
It takes a lot of thought
to get it dialed. And
it was all the editing.
Yeah.
It was all like the first draft was done in 3 weeks.
Yeah.
And then it took that much time to refine it and do everything and to make it what it is today.
Sure.
And then, I was kind of bored. So I was like, I'll get my real estate license. And then I started telling people I was getting my real estate license. And they're like, oh, we want to use you. And I was doing rent to own. So it was basically giving leads out to agents. And they were making more on the deal than I was putting the deal together. And I'm like, oh, this doesn't seem right. And then literally they were showing 3 homes, maybe 4. I'm like, well, I could do that. Like, why not? Yeah. So I basically doubled my income by getting my license. And then once I did, people obviously knew that I was an investor and knew what I was doing. So they basically asked me to help them buy investment properties. So
what year would this have been?
2009. So September 2009. So in 2010, I sold 56 properties. 2011 was like 70 something. And then 2012, I was like, oh, I'll just do 100.
Yeah. What the heck?
And then I did 100 and kind of burnt myself out.
Were you solo at this point?
I was solo with an admin or two, and burnt them out, burnt myself out. Figure it has to be something different, right?
Yeah.
So
what is the importance of a team then? Like if you're scaling and growing, doing 100 deals, doing 50 deals, I mean, what would the importance of a team be, knowing that you burnt yourself out and you saw what happened to the rest of your staff?
Well, I mean, let me ask you this. If you run a construction company, you could probably do everything, right? But could you do more if you had a team and have more time, right? Because if you were doing everything, you're probably working 7 a.m. to 7 p.m. and you get home, you're exhausted, and you basically go to bed, wake up, do it again.
Yeah.
Right? But you could build a whole house that way.
Sure. Every single nail, every single 2x4.
Yeah, you know exactly where all the troubles are because you put them there. So.
Yeah. For you, like highest to best use of time, did you realize, hey, if I hire 1 admin or 2 admins or whatever that looked like, did you say, okay, well, I could actually get this many more deals on my plate because I'm an active realtor? Like this is kind of how the time shook out, or how did that look for you?
Yeah, that was how the time shook out. And then it got to the point where like, this is ridiculous. I'm going to kill myself.
Yeah.
And that's when I needed to hire the sales agents on the team. You know Sandy McKay, obviously.
Yep.
Yeah, so Sandy and Kate were two of my first agents on my team. And then, built it from there. We went up to 12 agents. I actually sold that business 5 or 6 years ago now.
Yep.
And then kind of retired for a bit and from real estate sales.
Yeah. Is there more deal flow put or throughput with retail and residential versus investors?
No. Yes.
Yeah.
It's just different deals, right? Like, I mean, I used to say it like when I did 100 deals, I maybe had 40 clients, 50 clients, right? Like I had guys buy 5 properties.
Sure.
A couple buy 2 or 3 or whatever. Well, there were singles here and there too. Yeah. But most people bought multiple properties. And that's why I like the investor side, because I don't need to go find as many people to work with.
Well, they're speaking your language too, right?
Well, that's
and you're speaking theirs.
And I'm speaking theirs.
Hey, do this thing, cash flow, this is your down payment, boom.
Yeah.
If the numbers make sense, a little bit less emotional.
Well, and you remember those days, it was shooting fish in a barrel. Like there was 40
lots of opportunity,
40-year mortgages, 100% financing on rentals.
That was just before my day, actually. Like the 5 down, 0 down, 40-year M, whatever. That was just before. The first deal I ever did, I was able to do 5% down, but that was just the tail end of like retail residential investing, duplexes and stuff on 5 down before they went to 20.
Yeah.
But I mean, oh my gosh, 5% down on a house. And really, those houses were only worth a couple $100,000 in those days.
Selling in Hamilton, like my average sale price my first year was like $250,000.
That's insane.
Something. Yeah.
Compared to now was what, 800?
I don't even know.
Ballpark? 800 to $1 million?
800-ish, yeah.
Sure.
With the team. The team is 800, yeah.
Yeah, that's wild. That's wild. So then how did you transition slightly away from that to become more of the investor-focused mindset?
Wow. So I was always an investor. I bought my first rental properties 20-something years ago. Duplexes in Newmarket, Ontario. I would go in. They were shitty duplexes. They were already duplexes, though, because at that point, why would you convert anything when you could just buy a shitty one, fix it up for 10, 20 grand, do the work yourself, and now it's worth $250.
Yeah.
Right.
Isn't that incredible how construction costs have changed?
Oh,
I've heard of people spending $250,000 on a basement.
Oh, I don't understand that, but
that's incredible.
That's just because I'm getting old. Like, I'm going to be walking through with my kids. You guys can't buy this. I bought this in Toronto for $250,000 back in 2000. Like,
it's funny. So how did you make the transition? How did that look?
So again, I've always been investing, right? So how I worked was, once I became an agent, it was like, oh, hey Ryan, you don't like this property or whatever. Like, hey, do you mind if you don't buy it if I buy it? And they'd be like, what's the game here? I'm like, no, I'm actually interested. It was usually a hoarder house, fire damaged, bed bugs, whatever. Like it was horrible.
Pick your problem.
Yeah, like a bank's not going to finance it. Like so many issues, right?
That's the opportunity.
Well, and that's what I saw. Yeah. So I bought the worst of the worst. Always bought the worst of the worst, and made obviously a bunch of money doing it. My first apartment building was an 18-unit abandoned building. Like nobody lived there except for the homeless people who stole the rads.
Oh no!
And basically caused the whole thing to flood and sink.
You know what's funny? Rads are pretty much worth nothing.
Oh yeah,
like they're not copper typically.
No,
they're not brass.
They're cast.
They're just whatever.
Yeah,
you probably get $20-$30 for a rad, maybe.
Yeah,
I don't know.
But when you're a crackhead, I mean, $20-$30 back then,
rock and roll, baby.
Yeah.
Rip those things off the wall.
Yeah.
Continue.
And then we totally renovated that one, and we're like that 18 units, just perspective. Each has individual water, heating, and everything. And that we spent about 1.1 to renovate that.
Over 18 units.
Over 18 units.
Yeah. So
that was, I don't know, 10-ish years ago.
$80K a unit,
$75K. Yeah, I think we're $60 to $80K, but that's the roof. That's fixing up the shoring up the building so it stopped sinking. It was,
oh yeah.
Yeah, all these minor things,
No big deal. It's just a foundation. What city was this?
Hamilton.
What was Hamilton like at that time?
Hamilton was like Edmonton is right now. Ooh, it's what it feels like.
Really? Okay.
That's why I love Edmonton right now.
Interesting. So we'll get to Edmonton and out west in a sec. Just in terms of finishing up with this 18-unit project. Yeah. Did you say this was your first one?
That was my first multi-family apartment. Okay. Like anything over 4 units.
Yeah. Talk about financing.
So financing, basically we got financing through a credit union called Libro, and they gave us 75% of the first mortgage. And so originally we actually got a vendor take back because it was being sold power of sale. So the company that held the mortgage first held a new mortgage for us. Then in a year, we basically kicked them out, went to a credit union called Libro, and got a 75% first mortgage. And then they did 80% of all our construction costs.
Power of sale, 18 units.
18 units.
My goodness. My God. I had Bob. Do you know the name Bob Aaron?
Yeah.
He's a lawyer in Toronto.
100%.
I had Bob Aaron on the show recently.
Okay.
His episode hasn't come out yet. And we were talking about power of sale versus foreclosure. And power of sale is where the bank actually forces the sale to the open market, whereas foreclosure means the person doing it actually gets to retain it. Did you know that?
I did.
I had no idea.
Yeah, power of sale is way easier to get.
Yeah.
But then they're responsible for getting fair market value.
Right.
There's rules and stipulations behind it.
Yeah.
Like we've sold a couple for the bank and we're like, hey, we'll just do this. They're like, no, it has to be on the market for so long. It has to be this. It has to be exposed. And
yeah. Stock options. Before we go to Edmonton, I want to hear about Edmonton, but stock options. You put that in your portfolio as an income piece.
Yes.
Right. And I mentioned it in the intro. Why did you do that when you're so real estate focused?
Well, that's the reason I did it, right? Because I needed something outside of real estate that was generating cash, because we know this business has ups and downs. So I wanted to learn something that I could do that would be independent of real estate, that would be way more liquid. So if a good deal comes along, take it out of the portfolio or do whatever, and then, put it back in at some point.
Like take it out of the stock option, buy a piece of real estate?
Yeah, I've done
or
that.
Vice versa?
Yep.
Really? Does it not split your focus?
Well, maybe, but it takes so very little time for me to do now. And like, I've even refined it now. Like I literally buy dividend producing stocks and sell puts on dividend producing stocks. And if they get put to me, so I own them, I literally just collect the dividend and write covered calls at higher than my price on it. I own one stock right now. I maybe follow 10 stocks.
So you're hyper focused.
I'm hyper focused on it, and I really just stay in my lane there. And my goal is to make maybe 20-24% on it. When I first started, like obviously markets were stupid and tech and all that, we were making 60-70% a year.
Wow. Leverage or no leverage?
Leverage,
yeah.
Yeah. So now I'm unlevered at 20% a year.
Sure. So you were roughly 3-1 leverage at that point?
2-1.
Okay.
Yeah.
Wow. That's pretty incredible.
Yeah.
From your phone.
From my phone.
Boop, 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 boop.
Anywhere in the world.
On the boat, in the cottage, wherever you are, no problem.
Wherever you have service, yeah. Cottage didn't work so well.
You're like, come on, give me
I gotta
4G.
No, I got to go out on the boat to...
Yeah. There's like one spot you can trade options in the middle of the lake, and that's it.
No, anywhere in the lake was fine.
Yeah.
I could walk up the road, it was fine. It's just the cottage.
Yeah.
Which was nice at some point, right? Like you're not...
That's hilarious.
Yeah.
That's okay, so back to real estate. Whoa. Before we get back to the episode, don't forget to sign up to the VIP newsletter at thehighestandbestuse.com. You get great tips and tricks there, completely free. Also, don't forget to grab a copy of the book at thehighestandbestuse.com, Amazon Chapters, Barnes & Noble, all of these places. That's where you can get it. You can get it in paperback, ebook, hardcover edition, as well as the Audible version too. So if you like to consume content by audio version, grab that. If you like paper, grab it there too. And now back to the episode.
Yes.
Multifamily investing. You're going broad across Canada. You were previously an Ontario-specific investor. Now you've opened the floodgates and you've gone a little bit broader.
Yeah.
Let's talk about this.
All right.
So
I sold 7 buildings in Hamilton 2-ish years ago now, maybe closer to 3. I don't know. Time has kind of... It was during COVID.
It all just melts together.
Yeah, it all just melts together. And basically, obviously, got some capital, and I was like, okay, what's next? And I was like, oh, can I buy back into the Hamilton market? And I was like, no, it doesn't make sense. Like, I sold stuff at less than 3 caps.
Really?
Like,
this would be like 21, 22, somewhere in there?
2021.
Less than a 3 cap. Jesus, that would barely even carry.
Oh, it doesn't carry.
Yeah.
Unless you're putting 60% down, which,
right.
I mean, I sold a 22 unit building in Hamilton, which was in a good area, but the bidders on it like surprised me. Like the BioVale heirs were bidding on a 22 unit in Hamilton. Like a big concrete company out of Toronto. We're bidding on this. And I'm like,
Really?
I basically set it up for a bidding war. And we had like 30 offers, and people were still phoning on it as we're doing the offers.
Yeah.
And I'm like, is it over 4 million? They're like, no. And I'm like, don't waste your
send
time.
it.
Just
Save
don't-
your ink.
Yeah. I'm like, I don't need any more to get this up. So we had 3 people basically bidding against each other for it at the end.
Yeah.
It was like an auction style. And yeah, it was unreal. I was like, I don't understand why
Really?
you billionaires are wanting to buy my 22 unit building, but I'm like,
Mhm.
okay, I'm happy to sell it to you.
Did that surface? Did you find out what the goal was? Like why they wanted it so
Oh,
bad?
I mean, I asked the agent. I
Yeah.
just said, hey, well, it doesn't make sense to me, but I don't care. Really, if you don't want to tell me, don't tell me.
Yeah.
And they're like, oh, well, they like the location. There's a long-term asset for them. I said, perfect.
Good.
Well, I mean, it goes back to a story I've heard was a guy in like Eglinton and Avenue Road area. He bought a 1 cap.
One cap.
He's like a 90-year-old guy. And I'm like, what's a 90-year-old guy buying a 1 cap for? And he explained it like, well, it's not for me. It's not for my children. It's not for my children's children. It's not for my children's children's children.
Mhm.
It's for their children. Like he's going 5 generations away.
Oh my God.
And he goes, by the time they're,
The economic
Yeah.
life of that building would be so far past after 5 generations.
yeah, but it's the land value too, obviously, in
Sure,
that area. But
sure.
I mean, at the end of the day, you can increase economic life.
Yes, at a cost, I suppose.
Yeah.
Yeah.
But, at that point, when you have that much
Wow.
cash sitting around, I guess
Wow.
it doesn't, like, 'cause he's not financing that. So,
Do you think strategically there was some type of instead of doing like a life insurance policy, for example, maybe he was doing it through some kind of a trust or something where
Oh,
he could pass it
definitely.
through?
Definitely was, yeah.
Any idea how that would work?
Well, I mean, just have a family trust,
Yeah.
or different other trusts for sure.
Mm-hmm.
And then they're the beneficiaries of it, right? So then it gets passed on to them. And
You ever done it?
what, family trust?
Yeah.
A family trust.
Yeah?
Oh, yeah.
Nice. How did that work?
I mean, it just got set up a couple years ago.
Yep.
It seems to be working fine.
Mhm.
Yeah.
I guess you don't know if it doesn't work fine until it doesn't work fine, right?
Yeah.
It's
Well,
kinda one of those things.
and I might be dead by then. So,
Right on. So
Yeah.
then in terms of moving away from Ontario, why did you do that?
all right. So back down to, so I basically looked around
Mhm.
and, people were buying stuff at less than a 3 cap. And prices were obviously getting a little stupid.
Mhm.
So I was like, okay, where else? I know people investing in New Brunswick. I know people investing in the U.S., people investing in Alberta, Saskatchewan, wherever, right?
Yeah.
And I looked at it and I said, okay, well, let's explore these areas. Let's go to them. Let's look at economic fundamentals. So basically, I looked at New Brunswick. I looked at Arizona, Texas,
Mhm.
Florida. Looked at Alabama and Georgia. And I looked at Nevada a little bit.
Mhm. Hey, Vegas. Woo.
Well, that's what I was like. Oh, Vegas. This
Yeah,
would be
yeah,
good.
it's a write-off. What the
Yeah,
heck? Yeah.
fly out to Vegas, right? I looked at all these areas and basically came back to when I started buying in Edmonton. I was buying at less than 2014 prices. I was buying at less than replacement cost, and their income, their household income, is one of the highest in Canada.
Sure.
They weren't affected, like the prices hadn't boomed with the interest rates. I felt that oil was just coming back around, which is obviously a big portion of the economy out there. And, they were scheduled to lead the country in economic growth over the next 5 to 10 years. And they also have diversified a huge.
I was going to say,
right?
because a lot of people say, oh, oil money, I don't know.
Yeah.
Right. But things are changing. They're evolving.
I mean, they've gotten smarter about it, right? So number one, the oil companies they're not going to ramp up production like they did last time, right? They're not going to be like, oh, you're 18, just out of high school. Here's your $200,000 a year job. Come on in. Let's get you going. And however, right, they're just not hiring as much as they have,
Sure.
right? They have a plan. Here's our incremental growth, and that's what we'll do. But they're kind of constrained too, right? They have no pipeline.
Sure.
So they can't get their oil anywhere. So it's like, okay, why pull it out of the ground? We'll just do it longer because we know we're going to need oil for a long time. Even Elon said that, right? So
yeah, even it's funny to mention that because like Elon is saying he's not pro oil, he's pro electric car, but he's also not saying, hey, cut the pipelines off. He's like,
No.
we still need it.
Oh yeah.
The makeup, plastics, all the other petrochemicals that are a derivative of,
Yep.
right? He's like, don't cut it off. but I still want you to buy Tesla.
Yeah.
But don't cut the pipelines off. That's a really interesting perspective. Something probably counterintuitive for the majority of the population.
100%. Yeah.
How do you think something like that would affect Calgary and Edmonton and all those Western provinces?
Honestly, they're really diversifying away from oil.
Mm-hmm.
I mean, they had a huge windfall last year, like their royalties and stuff like that, like $13 billion, like unexpected surplus. Because they budgeted at $60 a barrel. Right. And it obviously shot up way above that. Mm-hmm. But they're being smart about it this time. They're reinvesting into high-tech jobs. Like, for instance, at my office in Oakville, it takes me a couple hours to upload a video with everything going on.
Mm-hmm.
I was in Edmonton, I shot a video, and literally it was 14 minutes. And I'm like, what the hell is your upload speed here? And they're like, oh, we're just used to this. Everywhere is fast internet here. Because again, that's why they're attracting those companies. Number one. Plus, I mean, you've seen house prices around here.
They're
in GTA.
They're incredible.
They're stupid, right? Yeah. Whereas average house price in Edmonton is just over $300,000.
Really?
Average house price in Calgary is like $450,000, $480,000.
So on a ratio of purchase price to income, like what's the comparison? Average income versus average home price.
Yeah, average household income in Edmonton is like $108,000.
Okay.
And the average sale price is like $330,000 or $340,000. So it's like 1 to 3. Yeah.
And typically, like historically, 3 to 5 times income is typically what people would buy. Is that right?
Yeah.
Yeah. So then you come to Ontario, very dependent on where you buy. But like in Toronto, like Toronto proper, what do you think the stats would be there as a benchmark?
I don't know what the average household income is in Toronto. I would guess it's lower than 100,000, but you're not really like take out. I think most people buying the homes in Toronto are making average household income 150 to 250.
Okay. For a house that's worth 1 to 1.5.
Yeah,
somewhere in there. Like condo at a like we get a broad swing here.
Yeah, but I mean, here's the thing. People ask me, how do people are they buying that, right? And I'm like, well, they're typically selling another property to get into that. Mm-hmm. So they're moving up. And so they're taking that equity or the bank of mom and dad.
Yeah.
And they're putting that towards that. And is it a good thing or a bad thing? I don't know. That's for them to decide, right? A lot of people, and I mean, in Canada specifically, like there's huge economic benefit to owning your home because you have no capital gain on a home sale, right? It's one of the biggest tax benefits that we have in Canada is the capital gains exemption on your principal residence.
Yeah, and they're starting to nibble at it just a little bit.
Well, they're trying. Yeah, there's talk about it, but they haven't done anything yet, right? So who knows? Have
you completely exited Ontario?
No. I still have one building in Hamilton, 19 unit, has a restaurant in there. Mm-hmm. That's one thing I didn't mention. I own 4 restaurants too.
I didn't know you had 4.
Yeah, I have 4 now. And we're opening up a 5th right now.
Cool.
Yeah.
Cool. Okay. So sorry, finish your thought on that and I'll ask you about the restaurant.
Yeah. And then we still got property in Toronto and obviously other properties lying around.
Legacy pieces?
Yep.
For the family trust?
No, none of them are actually in the family trust because they were all originated before we put that together.
So before you do that, you have to dedicate a property. Say, okay, this is going in the trust. The trust was open before I bought the property. Now it's going in there.
Yep.
Who goes on title?
The corporation the trust owns.
Oh, really? And they qualify financing?
Yeah, commercial is obviously different, right?
Yeah.
Like it's the building, and then I mean you're still personally guaranteeing.
That's right. The net worth, all that stuff.
Yeah.
Okay. Back to Alberta. Back to your restaurant.
Yes.
Then back to Alberta. Holy smokes, we're just meandering here.
Yeah.
4 restaurants. How'd you end up there?
So we had a property, had a commercial space.
Yeah.
There was a dirty pizza place in there, and I'm like
good dirty or bad dirty? Because sometimes the greasy places are kind of delicious, but sometimes they're full of bugs.
So okay. Yeah. Apparently the pizza was really good.
Mm-hmm.
I never tried it because I bought the apartment building. It was $50,000 a unit, which was like excellent price back then.
Yeah.
But I know what we killed in that building with pest control and people we kicked out or whatever. And I'm like, there's no way. Like he's got to pay off the health inspector to get that green thing. Like, or like he's like caulked everything, so nothing's getting in. I don't know. I don't trust it. Then it came out later that he was a bit of a perv too, and I'm like, well, I'm just glad he's gone.
Oh, God.
And I was like, yeah. And he tried to negotiate with me to buy him out. I'm like, no, I'm not ready.
Nah, man. Yeah.
Like you can do your lease. If you want to break your lease, we can talk about that. He's like, no, because he was serving pizzas for the schools, right?
Yeah.
Like that was his biggest thing.
Wow.
Was the school lunches that he would do. I'm like, ooh. Anyways, but I never did eat there. But we did put so back to how we got started in restaurants was we had this space, and I put it out there that I was looking for somebody to put a restaurant in there. Somebody introduced me to someone. I said, well, why don't you put a restaurant in here? He's like, he was a general manager of Canoe. He had moved to Hamilton. He had opened up a couple restaurants for other people, and he was basically managing 3 or 4 restaurants, general manager. I was like, why don't you open your own? And he's like, well, I have the money for like working capital, but I don't have the money to renovate. I said, hell, we're renovating the whole building anyway.
Yeah, what's the difference?
What's the difference? We'll just throw this in, and then we'll do it as a loan for this amount plus equity.
Sure.
And he's like, okay.
Nice. So that's how you got your chunk of the restaurant. You don't have to operate it, but you have a piece.
That's right.
Oh, that's the best.
Yeah. So my only job with the restaurants is to eat there and tell people to eat there.
Yeah.
So if you're listening to this and you're in the Hamilton area, go to Caro on Ottawa, Caro on James, or Victoria Steak and Seafood. And now coming up in February or March, we have the Locksmith on Lock Street. It's going to be an English pub. And we also have My Father Was Famous, which is a speakeasy, which we actually hold our monthly investor meetups at.
I love it.
Yeah.
Awesome. I see some of your posts on Instagram that My Father's Famous.
Yeah.
Yeah.
Yeah, it's a pretty cool spot, actually.
Lock Street's the best. I love Lock Street.
Yeah. So this is our Victoria Steak and Seafood is on Lock Street, but this is going to be on the cool spot on Lock Street. That one's not so. Yeah. Yeah. It's getting there.
Back to investing out west. So,
yes.
In terms of what you're buying out there, let's talk about that.
Yeah. So basically, we're buying value add. Buy it, get it vacant, or just turnover units. And the goal is within 6 to 12 months to put it into a program called MLI Select through CMHC, and basically do 95% financing, 50-year amortization, and cash flow it and hold on to them, but pull all the money out, obviously.
Yeah, 95. They'll take you up to 95.
Yeah.
As long as you hit the metrics.
Yeah.
Yeah.
Which is affordability, accessibility, and what's the environmental one?
Energy
efficiency.
Yeah.
Yeah, and we basically do it on affordability because in Edmonton, the rents have to be below $1,600 a month to be affordable.
Yep.
On any unit. And our 2 bedrooms, we're getting maybe $1,450.
Oh, so you just naturally qualify.
We just naturally qualify.
That's a bonus. So people have good income. You have great financing. You're able to acquire buildings at way less money, below construction cost or comparable.
Yep.
Right? And you do that on traditional financing from the purchase with investors.
That's correct.
That's pretty incredible.
Yep.
That's really incredible.
And then we can turn them pretty quickly.
Go to Edmonton, folks. I don't know.
Well, I mean, so people ask, what? Okay, a couple other reasons why it's great out there is because we don't have landlord tenant board.
Right.
So you're not waiting forever to kick someone out who's an asshole. They're an asshole out there. You can get them out in 2 weeks.
Yeah.
Lease ends. You don't want to do business with that person anymore. You say, hey, we're not going to renew your lease. Please leave.
Really?
Your lease ends. Rents have gone up $200. Hey, we're going to raise our rents. They're late. They don't pay. 2 weeks, they're out.
2 weeks. Wow. Is there a sheriff process like there is here in Ontario, or is it different?
Don't know. I do know there's obviously applications, and then I believe there's a sheriff process like that. You
don't just show up with 3 dudes and be like, you're gone?
No. We do rent to the Edmonton football team, so we could hire some of those guys on the
3
side.
3 linebackers roll up. Your lease is over.
I would do linemen, but okay.
Yeah. Too funny. Okay, so in terms of your value add, highest to best use for you, how do you identify an opportunity first of all, and then how do you roll that into something that would be considered highest and best use?
Right. So I mean, we're buying absolute crap. There's a lot of stuff out there that's been half-assed, and we just don't want to pay for those rentals. So we're generally buying stuff between 90 to 100 a door. And that nicer stuff is 105 to 108, but we just don't want to.
Is that a 1-bed, a 2-bed?
Typically half and half.
Yeah, okay.
Like we just bought a 90 unit and it's 46 twos and 44 ones. And I think it was like 94 a door.
Yeah.
And a lot of those units are actually pretty nice. So we're just going to go in and spend $6,000 and get rents up. And obviously
paint, flooring, quick cleanup, back out.
Paint, flooring, maybe new counters, new appliances, maybe a bathroom here and there.
For $6,000?
No. The bathroom wouldn't be included, obviously, but the counter, flooring, painting, lights, doors.
The high wear and tear items.
Yeah, for sure.
Are people hard on units out there like they are here? I feel like it's just a human nature thing.
So, I mean, we generally have a rule that we we rent to people who have jobs. And people who have jobs
That's a good start.
Yeah. Well, I mean, they just are naturally less wear and tear on the units than people who don't, right?
Well, respectful.
No, I mean, yes. But they're out of the house for 10 to 12 hours a day.
True.
Right? And then they're not just hanging about either. Whereas people don't. They're all there all day. Which
it's a pretty interesting thing because if you're working from home, you're using the services, you're using the water, you're using the hydro, right? Differently than if you go to somewhere and come back, because that's one extra meal you're not cooking at home, especially if you're on an all-inclusive program where your water, your hydro, and your heat's included.
Yeah.
Right? That gets put off onto the landlord. Whereas if you're going to work, well, you're going to work.
Yep.
That would come out of your jeans.
100%.
Interesting. Okay, so highest and best use. How do you determine that? How do you identify the opportunity?
Oh, it's a math equation at some point, right? Yeah. It's like, okay, if we do $6,000 reno, what can we lift the rents? So if we can get, say we're getting $1,100 now, we do that $6,000 reno, we can get $1,300. Okay, it's all based on cap rates. So $200 a month extra is $2,400 a month, or $2,400 a year. At a 5 cap, that's 20 times that. It's the value, right? So now we're talking about what, $50,000.
Yeah.
So at $6,000 made me $50,000. Now, if I went ahead and spent $25,000 or $30,000 on that unit, maybe I get $1,350 or $1,400. So is that extra money worth that extra time and effort?
Right.
Maybe, maybe not. Right. So it's just determining where we're at with that level of unit, and yeah. But our general renovation is, I would say, $18,000 to $20,000.
Entry to an Ontario property, because we have rent control here, is arguably a little bit different than Alberta.
Yeah. You're going to pay more. You're going to pay like a lower cap rate here because you can't raise the rents, right? And there's usually that huge gap. Like there was one I looked at today, and the agent was like 70% below market rents. And I'm like, or they have 70% lift. And I'm like, I'm looking at it, I'm like, well, those are old numbers. You probably got 110% lift overall in the building. So you're paying for some of that lift, right?
Right. In the purchase price.
Just
because they know they're going to get it either way.
Yep.
So it's not math, it's emotion at that point. Somebody's like, I want this more than the next person.
Well, it becomes math. It's that math equation, right? Because now I go in there and I go, okay, this person's paying $700. How much longer can they be there? Okay, maybe they're there for another 5 years. If I'm thinking long-term enough, then 5 years at the end of the day really doesn't matter. And I say, okay, that's $700 in 5 years without even renovating is probably worth $2,000.
Right.
So now $1,300 a month times 12. So what's that? Like 150 or 15,600. That's a $300,000 lift without ever doing anything. So you're paying for some of that lift up front.
Where do you think the most money is made in multifamily? Is it appreciation? Is it value add? Where is it made?
Okay, so short term is value add, and in Ontario turning those tenants, but long term it's holding good assets, and then it's appreciation and a mortgage pay down over time, and at some point you will get cash flow from the thing.
Right. Do you just consider cash flow neutral, just a buoyant?
I don't. Yeah, anything I own for less than 10 years, I don't think it's going to cash flow. That's just, I don't even, I write it off, right?
Pending interest rates or not even, doesn't matter?
Doesn't matter.
Really? Why?
Because I'm always going to be renovating that property within the first 10 years.
Gotcha.
Especially in Ontario.
So whatever income you get goes back into the property, turn another unit, On and on and on.
Just on and on and on. So I never budget cash flow on any of my deals.
Interesting. What are you using for appreciation in the market for Alberta versus Ontario?
So Alberta, I think we use 1 or 2% a year.
Okay.
Ontario right now.
Oh, Ontario, we're backwards. But
Well, we're backwards. Yeah. So, I mean, but here's the thing. You use historical averages.
Right.
So historical average would tell me 3% in Ontario. So that's what I'm going to use because that's what's going to happen over time.
Mm-hmm. Okay. Why is Alberta different?
Why is Alberta different? Well, I mean, it's a bit of the Wild West, which is why the landlord rules are so favorable or better. I mean, here's the thing. You can argue it from both sides, right?
Okay.
It's definitely better for tenants out there. They pay less rent.
True.
There's more labor, like there's mobility, right? Like you're paying $700 a month in an Oshawa apartment. You can't leave that.
Mm-hmm.
You're locked.
True.
Right? Like you can't leave that. Like if you left that, now you say you want to go to Clarington, you're going to spend like more than double that, right?
To get to market rent.
To get the market rent.
Right.
So you're locked in Oshawa. So you get a job somewhere else that maybe you can't get to that maybe pays you $20,000 a year more, but you look at it and say, well, I can't do that because I'm going to spend $12,000 more on rent.
Mm-hmm.
Right? It doesn't make economic sense.
Right.
Whereas in Alberta, 95% of the population is on market rent. So, hey, I get a job. Like I'm in Edmonton. I get a job in Fort McMurray that pays me a heck of a lot more.
Mm-hmm.
All right, here's my notice. See you later.
Because you're current at all times anyways.
Yeah.
Just because of the way that province operates.
Right. And so one of the that's obviously a benefit to the tenants, which, you know, if you didn't have rent control, that might help out.
Sure.
But it would take a long time to catch up in Ontario because there's such a deficit.
Yeah.
But the biggest thing out there is why it makes me nervous is that you can build out there. So how long did it take you to get permits?
Forever.
Right. So
Forever.
In Alberta, I have a 40-unit building, and I can change the use to go up like for a, I don't know, 25 or 30 unit or 30-story building. Mm-hmm. But like right now it's zoned for like 120 or 125 units. And so that thing, I could have my permits in 2 months. I could have shovels in the ground in 2 months on it and be ready to go. And I could have that thing probably done and completed within, what, a year?
Yeah.
Maybe,
Arguably,
maybe a year and a half, right? Depending on what's going on, right? But it's not the municipality holding it up.
Mm-hmm. Wow. Do you think that's the gateway drug?
What do you mean by that?
Well, there's opportunity there, right? So if there's more opportunity to have opportunity, you'll get more people coming to take advantage of that. Whereas in somewhere else where you've got more friction, less people go.
Yes. I think so. I mean, yeah. No, there's definitely, I just looked at that stats yesterday for Edmonton, and like the overall builds of single family, whatever, residential thing was up 26% year over year.
Wow.
Right.
Wow.
And sales were down slightly year over year.
So they're getting more, they're getting more supply.
So they're getting more supply.
Net migration. Are they getting more supply?
Yeah.
Yeah.
Net migration. But I mean, a lot of the, obviously people newer to Canada, they get a lot of immigration. They're going to rent typically at first. The interprovincial migration, they're typically going to buy, right? Because if you're coming from Ontario, which a lot of people left Ontario to go to Alberta,
yep,
they're going to buy because they're going to sell whatever here and go buy there. Or even if they don't sell here, they're going to stop renting here and go buy there, right? Because they have Canadian credits and that type of thing. And yeah, I mean, it's wild out there. Like the air is cleaner. Like just putting it out there. Mountains,
yeah,
unbelievable. And it's just, I don't know, it's just a general, more business-friendly attitude. But that doesn't make me nervous is that it's the Wild West and, okay, here's 100,000 more units on the market.
Right.
Because that can just happen.
You could have a gluttony of units and that pushes your rent price down.
100%. And it does, right? Because if a municipality in Ontario saw the immigration and migration, interprovincial migration that Edmonton saw, there would be no way that it would handle it. There's just no way. Like rent prices would be up like they're here, like 25-30% year over year.
Sure.
Yeah.
Because too many people are coming in based on what's being constructed.
Yep.
Well, we're kind of seeing that anyways.
We are seeing that here.
Right?
Yeah.
Yeah. Okay. So where would the most money be lost in multifamily?
In general?
If somebody isn't educated, perhaps.
Rental costs, like obviously it's like anything, right? You build a fourplex, like you can get killed on rental costs, right? It's just keeping that under control, and it's the math problem again, right? It's like if I do this, what's my ad?
Yeah.
Okay, so $6,000 gets me a $50,000 lift, or $22,000 gets me an $80,000 lift, right? Which one's better economically for me, and just longevity of the building and that type of thing. But like maybe you could bump that to 50 grand, right? Like easily you can spend 50 grand. Is it worth it?
Right. How do you protect yourself from that?
Out there, I have our property manager. They charge us 8% to oversee all of our construction.
Yep.
So we use them.
They're all in-house? Everything's in-house?
No.
No?
No. We hired a company out there to manage everything. Yeah, so they charge us 8%. They oversee all our projects and everything out there. They're the ones like, this is the next unit. Here's why. And I'm like, okay, perfect.
Yeah.
And then we go, okay. I'm like, what do you guys think we should do here? And then I'm like, okay, either dial it back, or I think we should do more on this one.
Gotcha.
Because again, they're not running the numbers like I'm running the numbers. I'm just like, give me, okay, if we spend this and we do all this, what do I get in rent? If I spend this, what do I get?
Yeah. As we wind it down, talking about property management. So managing from a distance can be a challenge. It can also be fantastic. What has your experience been and why?
Okay. So after my first 2 rental properties in Newmarket, Ontario, I found out that I'm a horrible property manager and that I should never do it. And it's not the highest and best use of my time.
Sure.
Highest and best use of my time is always to buy more properties, right? To add another property and put it into a system and model that is flowing and working, and away we go, right? So I always recommend people get property management, or, I mean, like I know Quentin obviously has his own that he's built in-house, but it's not him doing it.
Yeah, he was episode 1 and 2. Actually.
Was he?
Yeah, he was, yeah.
Yeah, there you go. And he probably talked about property management a lot.
He talked about all kinds of things, multifamily, property management, all that stuff, yeah.
Yeah, if he didn't give me any credit, I'm the one that got him into apartment buildings. I'm like, what are you doing on these stupid duplexes? Go buy an apartment building. He's like, no, it doesn't make sense. I'm like, just go buy an 8-plex and then come to me in 2 years and tell me it doesn't make sense. He's like 6 months later, he's like,
you're right.
You're right. I don't think he's ever bought me a beer for that.
Well, I guess he's due.
He's due.
Yeah.
We digress.
Property
management. So I've gone through so many property managers throughout the years. It's a horrible job, right? Like, tenants are always after you. The manager or the owners are like, okay, well, show me the economic benefit of doing whatever we're talking about.
Yeah.
And, so you're getting pulled on both sides. And in Ontario, especially for myself, it's like knowing the rules, going through all the rules and following them step by step. It's like, it's arduous, right?
Yeah.
So it was better off left to somebody else. And, whatever that cost is, 3 to 10%, whatever you pay, it's well worth it. So I vested first in Newmarket when I was in Toronto. So, I mean, it was only 20 minutes up the road, but it was 20 minutes that I could be doing other things.
Yeah.
So once I got everything settled and tenanted and everything, then I put property management in place. Then we bought in Toronto. I managed the stuff in Toronto just because it was a lot easier, to be honest with you. Just different grade of tenant.
Caliber.
Yeah. And then we bought a whole bunch of stuff in Cornwall, and we had property management on that. And then
that would have been a hike for you.
Yeah, that's 4 hours, right?
Sure.
Like it's actually
begrudgingly up the 401. You're like, oh, I'm going back there.
Yeah.
Oh,
and now it's actually easier to get to Edmonton, right? It's only a 3.5 hour flight.
Right,
so,
right.
Then we bought in Hamilton. And I'm like, well, I'm not managing it. It's half an hour down the road, but I'm still not managing it. So hired property managers. And you know what? I've been through, I don't know, 10 or 15 managers over the course of my career in different areas and different stages of my career. And, good, bad, ugly.
You find there's different property managers for different reasons?
100%.
Yeah.
Like we tried to hire a property manager out in Edmonton, and they're like, we won't take you on. And then we're like, why? They're like, we only do singles and duplexes. That's our gig. That's what we're good at. We're not deviating. And I'm like, I respect that.
I was going to say, you have to respect that.
I'm like, thank you so much for letting me know.
Yeah.
Like, I really like you guys. And if I ever have someone like that, I'll definitely refer them to you. But I love that you know your model, right? So they have their model, they stick to it. And that's what I really look for in a property manager now. It's like, okay, what's their model?
Yeah.
Are they managing 2, 3s, and 4s? Or are they just managing apartment buildings, right?
True. Do you think there's a property manager specific to value add versus somebody who's got a turnkey building and says, okay, I can continue this for you?
Yes.
Yeah.
100%. Out in Alberta, especially, like I met these guys and they're like, oh, well, you have to use our in-house people and this is what we do and blah, blah, blah. And I'm like, I don't know your people. I want to see their quality. And I'm like, I don't really like their quality. Can I add? And I was like, this is just complicated and here's the thing. They have a mindset of what things are worth, like rentals and that type of thing. And how maybe a little old school, right? They're like, oh, this is how Edmonton was 10 years ago. It's still like that. Because that's what it was when I started in Hamilton too. Was like, oh, this is Hamilton. Why are you putting marble? Why are you putting granite into Hamilton? I'm like, because there's people who want to pay you a lot of money to rent these properties, right? And people thought I was weird.
You know what's interesting about that is the cost to put in a laminate countertop versus a granite countertop or quartz or what have you. Depending on the profile of the actual shape, it's not that significantly different.
No,
you're replacing it anyways. Like you might spend $1,000 on laminate or $1,700 on quartz.
Yeah.
Okay, so there's a $700 difference. You're probably going to make that back over the course of 1 year's worth of rent.
Well, that and
in lift.
Well, that in 5 years, I'm not replacing that countertop
exactly.
again.
Pots and pans and scuffing and cracking and all that stuff.
Yep.
Yeah.
Which I never understood why anybody doesn't just use stone now.
Just do it.
Yeah. But yeah, and that's the thing, right? So if you're going to get property management, is interview that property manager. What do they rent? Like what do they manage? Are they ready for you? Like I've gone to property managers and I basically doubled their portfolio and I'm like, well, so this is a longer conversation. Yeah. How are we going to handle this transition?
You're going to break every system they have.
Yeah. What are we going to do? How's it going to look? And and I did make that move and it was a good move for a while. And then I hired in-house in Ontario and that was a bad move. But you live, you learn, right?
Sure.
So I know I would suggest everyone gets property managed. Like if you have more than 3 properties or you plan to have more than 3 properties, like manage your first 2 on the third property management. And then, because if not, it's going to take up all your time.
What do you say to the folks with no cash flow that can't afford the property manager?
Sell and go to a spot where you can get cash flow. I don't know. Call me. I can sell the property for you. Well, I mean, again, it comes down to their goal. If their goal is to go buy a heck of a lot more properties, then it might be bite the bullet, pay the property manager and eat that cash flow.
Right. To free up the time.
If it's not, like if that's not your goal, it's okay. It's, bear down, grin through this higher interest rate environment, keep taking 2-year mortgages. And at some point rates are coming down or will come down, right? A little bit. I mean, this is more normalized rates than we've seen in a long time, right? Like this is still cheaper than when I started buying in 2000, except the price is 5 times more, right? Yeah. So, I mean, it really depends on what their goal is, whether they want to buy a heck of a lot more properties, they want to scale and do all these other things, or if they're happy with their 2 or 3 properties, I'd say manage it yourself. Sure. Why have that 6 to 8, 10% expense, right? Like that's the difference between the new furnace in 5 years or not, right?
True. This has been fun.
Yeah,
this has been really fun.
Great.
Thank you so much for being here. I like from this side of the mic, I really love the fact that you're very fluent with real estate. Obviously, you know your stuff. You've got your fingers in so many different areas, interprovincially, multifamily, selling real estate, trading options as well, and having that fund some of your real estate portfolio too with great returns. So for me to you, thank you very much for being here.
My pleasure. Thanks, Ryan.
Where can people find out more about you?
Hit me up on Instagram, Living the Dream 40, or look me up on YouTube, Mark Loeffler Experience.
Awesome.
All right.
Awesome. There you have it, Mark Loeffler. Thanks for tuning into the Highest and Best Use Real Estate Podcast. Don't forget to sign up to the book. This guy right here, sign up to the book at thehighestandbestuse.com. I'm your host, Ryan Carr, reminding you that good deals are found, great deals are created. Like, share, follow, and subscribe, and we will see you on the next episode.